full terms of this disclaimer and accept responsibility for your own investment decisions. This lesson will focus on answering the following questions. Before we continue, pause the video, read through them, and be certain to minimize any distractions. If you've ever participated in the foreign exchange market, you'll be familiar with the idea of gaps. What is a gap? It is simply when the price jumps up or down, and it typically occurs after the weekend. Now, what causes the gap is that during the time where the market is closed for retail traders to participate, there are still transactions occurring between the banks. So looking at this example on Euro USD, we can see that price gapped up over the weekend and it gapped about 40 pips. Now, the gap was successfully filled after price rose a little bit higher to test this structure over here. But this occurred because there was a large block of transactions and an increase of demand during that time the market was not open for the general public, where it caused the price to gap up. We saw more and more investors moving money into the euro until eventually we got that reversal and price continued moving down. Now, because of supply and demand and the fact that order books exist in Forex, when we apply this thought process into cryptocurrency, regardless of what time frame we look at, we're going to be able to identify gaps. However, some of them may not be as noticeable as when you start getting into the minute by minute data. If you're trading on a mobile device, these gaps at times can be very prominent. And so let's go ahead and take a look and see if we can identify any gaps here on the minute chart. We have one right here, immediately to our left. And we could go ahead and identify that with a box. We could expand that to the right and expand that to the left. And so what happened in this moment is that there was an imbalance of demand. There were so many buyers that wanted to come into the market that it gapped price up about 10 pips. Now, when we look on this chart, we see little miniature gaps everywhere. And because we had mentioned the order book, I'm going to show you now what actually happens behind the scenes and why we're able to see these gaps so easily when we really start taking a look at the orders themselves, because these gaps can happen at any time on any asset. So it's important for us to be aware how supply and demand in the order book itself is causing price to jump. Because if you have a stop loss trading Forex, if price were to gap over the weekend, price could gap beyond your stop loss, which would result in you taking a larger loss than necessary. And the same thing is true for cryptocurrency. If price were to gap beyond your stop loss, or if there was such a large movement where it gapped beyond your take profit, your position could either incur a larger loss or you could receive more profit than you anticipated because the price gapped beyond where you had your order set to stop you out or take profit. When we're using the order books and we're considering the larger picture, with an aggregation period of $10, we're not able to see every single price level. It's not only until we start going deeper and we see what's happening at every single price level where we're going to be able to identify that there are certain gaps in the order book. Perfect example, looking in right here at the current price, we can see there's about 131 buy limit orders at 592.94, and there's about 126 sell limit orders at 592.95. As we look down the order book, we can see that not every single price level has limit orders waiting on it for people to buy or sell. So if a large sell order were to be executed into the market, successfully pushing price down, depending on the quantity of the order, we could gap on the chart because there is not enough demand at all of these individual levels. Some of the levels do not even exist, and you're only going to be able to see this order book information as clearly as we can when you're looking at cryptocurrencies. But the same concept applies with Forex. So understand that gaps can occur at any time, especially in the foreign exchange market when we see some sort of economic event, a major news release that moves the market. The market is susceptible to gaps in those moments. Same thing over the weekend. When the retail public cannot see the price movement and what's happening behind the scenes, that is why sometimes the market gaps once Forex resumes for trading on Sunday. With cryptos, gaps can happen simply due to how the order book is structured. So now that you're aware, you can be more mindful of what happens if you, for some reason, take a larger loss than anticipated because price jumped your stop loss. And you can also understand why at times you may find yourself gaining more profit than you expected because the market is going to fill you at the best possible price. And if there is no liquidity at the specific price level that you are looking at, and it just so happens that the market gaps, then it's natural for you to get filled at the next best possible price after the market environment stabilizes. In summary, gaps are caused by an imbalance in the order book. When large volume is moved into the market and there is not enough orders at the specific price point, the chart will gap to the next area where there are buyers or sellers. Now that you're aware of that, you can effectively be on the lookout for those moments where price does happen to gap because more often than not, at some price does happen to gap because more often than not, at some point, we could expect the price to return to that area, even if it does extend and move a little bit further in the direction that it gapped initially before coming back. There's no specific amount of time that it could take to see the price gap get filled, but just be mindful. If you notice a gap, there will be traders that are placing orders based off of that. Be sure to leverage the resources made available to you, and the most important thing is to stay plugged in. As you implement the information, ask questions and remain open minded, because all trading requires is persistence, discipline, and acceptance that you can and